All right, welcome everybody. Greetings to you wherever you're joining, and welcome to Jugos FX mentorship for the year 2022, October. So this particular lesson is for complete beginners, those that are starting right from scratch, okay? Those that have no experience about Forex. This is the basics. This is the first video that you're going to, the first lesson that you're going to take. And in this lesson as well, I'm going to be showing you how the mentorship is going to look like, the stages, the phases that you are going to go through to be able to finish the training. And remember, as a VIP student already, as you have registered, you are going to have a lifetime mentorship, right? So you will always be on the VIP mentorship where coaching, mentorship, and will be done there, series of live videos and all those are the benefits of being on the VIP. Okay. So welcome again to Jugos FX mentorship for this year of 2022, October. This is October training. So with this mentorship, like I said, this is the first course, all right? This is just the first base, the first phase of the mentorship, which we are going to be talking about what is Forex? Why do you want to trade Forex? Who trades Forex? When can you trade it? And then you will look at the structure of the market, the hierarchy of participants, market participants, what are currency pairs, major currency pairs. Then we look at some definitions, basic terminologies, and that is phase one, sub B. All right. So we're going to define all these topics in the phase one sub B, all right? But today, this very session, this very for the basics is just like an introduction. And after the introduction, this is what I'm going to be talking about, which is phase one, which is introduction to Forex. We'll talk about phase two, which is structure of the market. And then sub C, which is currencies, all right? Because I'm going to give you the definition of that. So this is just phase one. This is what you have in phase one, which is just the basis. We have phase two, we have phase three. It's right up to phase 10, okay? So it's right up to phase 10. I will not be showing you what is there in phase two, phase three, phase four, five now, all right? I want you to be anticipating. I want to raise your anticipation, all right? So what you are going to get is what I'm showing you now in phase one, all right? Phase two is going to be a powerful video. So I want to build, that means to make your anticipation, you should be anticipating something great from phase two, all right? So with this first video, like I said, it's just the basics. Let's get to it to know what is Forex, why trade Forex, who trades it, and when can you trade Forex, okay? So with that, let me just open my chart. Now, this is a chart, like I noticed some people in the group, they were like, what is this chart saying? You don't have to rush it, okay? We are going to cover that. We are going to cover that. All right, that's the purpose for this mentorship. We're going to teach you how to know the meaning of this chart, because this chart is simply just telling you a story of what is happening between buyers and sellers, or between traders in the foreign exchange market. Okay, so let's start with what is Forex. So here I've just put it down on simple terms, like the foreign exchange market, like you hear Forex everywhere. It's simply an abbreviation to foreign exchange. Okay, foreign exchange is just a short form that they have put as Forex, but they in full is foreign exchange market. Okay, so it's the Forex market is a global marketplace for exchanging national currencies. Because of the worldwide reach of the trade, commerce, and finance, Forex markets tend to be the largest and most liquid assets markets in the whole world. Or you understand? So currencies traded against each other, exchange rate and pairs. That is it. Forex trading is simply it's an exchange. Just put that word in your mind. All right, it's exchanging of currencies. You exchange one currency for another. You exchange one currency for another. Let's say you have a CFA franc and you need US dollar. You have to exchange it, and that act is already Forex trading that you're doing. Like suppose you have gone to an airport. Let's say you're coming back from UK and you land here in Cameroon or Nigeria, anywhere Once you come out of the plane, you will need to exchange your home currency, right, with the one with the country you are currently at. Let's say you are coming back with US dollars, for even just to pay those guys that carry your luggage, you have to exchange it, your US dollars, and then you pay them with the CFA franc, right? So that's just forex that you're doing. Is you're currently exchanging it at that time. All right, that's you are exchanging currencies. That is it. That's the meaning of forex. Okay. So with the second question, it was like, why do you want to trade forex? This is simply just to make profit. Okay, it's simply just to make profit. All right, that's how it is. Even on the banks, let's say you carry your US dollar, let's say you have 50 US dollars and you go to exchange in the bank is going to exchange it to you, and the bank is going to make profit from that transaction. You get it. Now let me just let me do this. Let's say you have like let's say $100. $100, you go with it to the bank will give you a rate like, okay, the bank will tell you that $1 is equal to 500 francs. All right. Now, if $1 is equal to 500 francs, this means that your $100 will be worth 50,000. Okay. So, but now this rate of $1 equal to 500 that the bank is giving you, they're giving you to make profit as well. Now, the following day, now you can go and you say, okay, I have $500. I want to exchange. No, I have 50,000 and I want to exchange it to $100. Now the bank will tell you that, okay, the exchange rate now is 600 francs. Now, what does this mean? This means that you are going to be giving the bank instead 60,000 now, right? You're going to be giving the bank 60,000 for them to give you the same $100. So this particular transaction, the bank is already making a profit of $10. Now, what does this tell you? It tells you that if the person that wants to exchange, that means you come for me to exchange your dollars, I'm going to be doing that transaction with the aim of making profit, right? That's how business is. If you buy something, you want to sell it, you must sell it a bit high. You understand? That's simply how Forex, or that's simply how profits is made in the Forex market. And that's why a lot of people trade Forex. Okay. Now, if you see here, you will notice that we have a global forex market. Now, this market, like I said, is the largest market in the world, largest foreign exchange market in the world, which has a daily trading volume of 6 point. Now, this has been updated to around 7.2 trillion dollars a day. Okay. Now, this means that this is currently a market where in a trading day, right, 7.2 trillion dollars is circulated. Now, let's say in Cameroon, let's say the biggest market in Cameroon, we can put it that, okay, maybe the biggest market in Cameroon in a day can have a trading volume of about 1 million US dollar. You understand? So you see how large this market is. And now this gives us a large opportunity. This means that you can never make a lot. You can never say you have made a lot from this trading day, from the volume that is traded in a particular day. You understand? There's this George Soros, he made 1 billion US dollar in a single day, and that cannot affect even the market because the turnover is just too much. All right. So even if the whole world is trading forex, the money is still there. This is this $7.2 trillion that is circulating in a particular day. All right. So now, if you look at it from here, you will notice that the next question is, who are the people that trade forex? Okay. So asking this question, you will come now to see the participants that are found in the forex market. You can start this. We have the major banks. The major banks, Bank of England, Bank of, all these are the major banks of big countries, right? And then we have electronic brokerage services. Now, this ones they talk about, these are brokers. I don't know, many of you know about Xness. We are going to talk about that. You have to create your account with the Xness broker. Now, these are like brokers. These are the second people that have that trade forex. It is coming from a hierarchy level, right? It means that for the major banks, they are the ones that have the highest amount of money that is circulating in this forex market. And then you come to the brokers, you have medium sized and small banks, right? Like these small banks you see around. You have retail markets, we have retail ESN, hedge funds and commercial companies, and then retail traders. So this is where we are. This is where we are, retail traders, all right? Individuals like us. These are the us at the bottom. Why are we here? It is because we have the lowest amount of money to participate in the forex market. An individual can come into the forex market with $5. You trade $5, maybe at the end of a year, you have made almost $10,000. All right. So we retail traders, we are the last because we come in with little or no money to the forex market. These people, we are talking about people that have account balance of billions of US dollars in the forex market. They trade, they have a lot of equity, they have a lot of capital. All right. So now the next question here was that was the hierarchy, the market participants. So let's look at the market participants. We have looked at that. And now, like I said, we have central banks, we have companies, institutional investors, commercial banks, individuals like us, and then brokers. Okay. And then when you are looking at a hierarchy level, we start with major banks, the central banks, institutional investors, companies, individuals, commercial banks, and then brokers. All right. These are also here individuals. So now the second one is that's phase one. So the second is no, we jump this. When can you trade forex? This okay. Now forex deals with currencies. Okay, we have forex in the forex market. You can trade stocks, you can trade metals, a lot of them. When I'll go to the chart, I will let you know. Right, so you can trade currencies, and trading currencies in the forex market, you can trade it 5 days a week. All right, 5 days a week. That means you can trade from Monday to the market closes on Friday. All right, it closes at Friday in the night at 10 p.m. All right, so this means that you can trade 5 days a week. Okay, but now when it comes to stocks and cryptocurrencies, you can trade them 24/7. All right, you can trade them 24/7. You trade from Monday to Sunday. I mean, it's the market is always open. Now, why is this have a particular time of trading? Now, this trading is traded on sessions. Okay, like most of you have been hearing about New York session is the time that the New York banks are open. You look about London session is the time that London banks are open. We talk about Asian session is the time that Asian banks are open, Tokyo and all those things. We are going to talk about trading sessions. Okay, so that's when can you trade it? That's the answer. You can trade it anywhere, anytime, as from Monday to Friday 10 p.m. The market closes at Friday 10 p.m. and it opens on Sunday 10 p.m. Okay, so that is it. Now let's go to sub C, which is currency. What are the currency pairs and major pairs? Right, when we talk about this in our next clip, I'm going to go deep to this, which will start to have some little calculations. All right, so what are currency pairs? Now remember I said when in the forex market we are exchanging currencies. You exchange one for the other, you exchange one for the other. And now that brings me to the reason why you see currency pairs here, they are paired together. All right, they are paired together. Now this is the symbol here, and you have the currency pair. This is the name of it. And then this is GBP, which stands for British pound, and then US dollar. Okay, now euro, this is Euro USD, which stands for Euro USD. You have USD GPY, which stands for US dollar Japanese yen. Now, if you look at this, you will discover that at the end, each currency has 3 letters, and the last letter of it stands for the name of their currency. Okay, it stands for the name of their currency. Like for instance, you have this Great British. This is Britain, and then you see the pounds. Britain is pounds. All right, now US here is US. The D there stands for the dollar, and right up you look at euro there stands for euros, and then you look at GPY, which is Japanese. The currency name for Japanese is yen. Okay, so when you look at it, they are all selected three letters, and the last letter of it stands for the name of that represents the currency. Okay, so currencies are paired together. Currencies are paired together for us to be able to exchange. Now, this means that if you look at a currency pair like this one, and you want to trade it, if you want to trade it, it means that you are exchanging one for the other. Okay, you are simply exchanging one for the other. All right, that's the reason why they are paired together. Now, in our videos, I'm going to be showing you how to um, how to trade. I mean, the main things behind the exchanging of two currency pairs. Now, let's just give it a quick this thing. Like, now, if you want to trade this GBP pair, GBP USD, this is a pair now, right? It is a pair. It means that you are exchanging Great British Pound for US dollar. You understand? It means that you are exchanging British Pound for the US dollar. Now, if you want to trade Euro, it means that you're exchanging Euro for US dollar. If you want to trade US dollar Japanese yen, it means that you are exchanging US dollar for Japanese yen. Now, this comes to you now asking, okay, if I want to buy GBP USD, what does that mean? Now, if you are buying GBP USD as a pair, it means that you are buying GBP USD and you are selling USD, all right? Put it in yourself that, okay, this GBP is owned by somebody and you have US dollar, all right? It means that you are selling your US dollar to the person and you are buying that person's GBP GPY. This is a Great British Pound. You understand? So that's simply how you go with the knowledge of exchanging. That's the simplest way I can put it for you, exchanging pairs. Now, there you notice here that we had these major currency pairs. All right, like I said, currencies are paired together. Okay, so we're going to look at the major currency pairs. What are major currency pairs? When I talk about major currency pairs, I mean we mean the currency pairs that are the most traded. You understand? They are the most traded in the forex market. And now, when you look at this here, you discover that we have like 7 of them. Now, these 7, most of them, they have the US dollar, they have the euro, and they have the GBP and the Japanese yen. Okay, these are the most traded currencies. The most traded currencies. Okay, now look at this here. These are the most traded, especially Euro USD starts from the highest to the lowest. Okay, Euro USD is the most traded currency pair in the forex market. Okay, so looking at GB USD and then USD GPY, United States Japanese, USD Shift. Then this is Switzerland francs. We have US dollar and the Canadian dollar. You have Australian dollar and then US dollar. We have New Zealand dollar and then US dollar. Like I said, these 3 letters of it represents the currency name. Okay. All right. So this is it. These are the most traded currency pairs. Like they are the measures, they are the major currency pairs. And when you look at this, you discover that the US dollar is involved in all of them, which means that is the US dollar is the most traded instrument in the forex market. Okay, it's the most exchange unit or exchange currency in the forex market. Now, this means that if you have euros, that means if you want to buy or you want to trade this euro USD, you are either exchanging euro for US dollar. Okay, I know that it's still a bit complicated because you haven't seen this on the chart. So I'll go to the chart and then I'll illustrate for you how to be able to understand the buying and the selling that I'm talking about. Okay, let's head over to my charts. And then now when you look at this, you will notice that this chart has been dropping down. All right. And now this chart is a chart of GBP US dollar, which is Great British Pound US dollar. All right. So now this has been dropping. What does this mean? If you discover that a chart is dropping like this, what does it tell you? It tells you that now Great British Pound, okay, is weak against the US dollar. Now, at this point, when the market is dropping, we are selling. All right. When it is going up, we are buying. Now, I'll give you this simple slogan that is in the forex market, which says that you buy low and then you sell high. Okay. This is just a simple principle that goes with all kinds of businesses. When you want to do a business, you must buy stocks or you must buy assets that are very cheap and you sell them that are very high. Okay. That is how to make profit. So now, when a currency pair is dropping, or a currency is facing crisis in their economy, you will discover that the chart here is going to be dropping. Investors, they are going to be selling, their shares out, okay? And when they are selling, the prices of it is going down. All right, when it reaches to a level that is very cheap, investors will come back into invest to buy that particular currency because it is cheap. And when they buy it, the prices goes back up. What happens is they sell it back and it goes back down. So that's why you always see a chart moving in a wave form. It's not just moving in a straight line. All right, you will always be moving in a wave form. All right, so just have this with the knowledge of the basics, that you buy prices when they are low and you sell it when they are high. Okay, now this means that if the economy of the Great British Pound is okay, is strong, you will discover that the prices are going up. Okay, if it is weak, you will discover that how the prices are going down. All right, so now at this point, if you are selling this pair now, looking at it that you have Great British Pound and the US dollar, what does it mean logically? It means now that you are selling GBP, Great British Pound, and you are buying US dollar. All right. So you are selling this to buy US dollar and you are going to be making profit. All right. When you sell here, you are making profit. When you buy down, you are making profit. Okay. As you sell, the market is going down, you are making profit. As the market is going back up, you are making profit if you buy it at that lower price. All right, like I said, it is normal. That's how business is done. If you buy things, you come to the market. If you don't sell them high, you're not going to make any profit. And if you buy things to come and sell, and then you come and you are selling at a higher price, you're not going, you're not going to make profit, right? I mean, if you go to the market, or let's say you travel somewhere, you go and buy stocks at a cheaper rate, and then you come and you are selling cheap again, I mean, you are not going to make profit. You are instead going to make a loss, which means that you cannot be selling right down here because the exchange rate of this currency is already cheap. All right, it's too cheap, which means that people are instead buying from this level. Okay, people that sold here, they are now buying at this level. You understand? So you buy at a lower price and you sell at a higher price. That's just the law of demand, right? That's just the law of demand. When the price of something is too cheap, the demand for that thing becomes very high. And when the demand of the thing becomes very high, prices goes up. All right. Put it to yourself that you are the one in the market. If you are selling something and you discover that a lot of people are coming to buy, once you increase the prices as a business person, you are going to push the prices up. And now when you push the prices up now to a certain level, when you push the prices up to a certain level now when you look at my left here, these are prices, okay? 1.190, these are the prices. So now if you push your prices up to a certain level, you will discover now that people that are buying, they will no more be interested again, which means that the demand for that stock has reduced. When it reduces now, what happens? You, as a business person, you have to also reduce your price. Okay, you have to start selling. So you have to start selling so that, I mean, you have to reduce the price, and reducing the price, that is, you are selling. Okay, you now at this point, the supply is much, and instead the demand is not there. So what happens? The prices have to drop so that people can get in. All right, people can buy, because at this level, the people that are buying, they're no more much again. And what happens? Your prices must have to go down. All right, that's simply the same issue with let's just talk about, as December is coming, you discover that price of things are getting expensive day by day, and on December they will be very much expensive. And after December to January, what will happen? The prices of those things will start to drop. All right, it's the same thing here with a currency pair. When it is cheap, people buy. When it's too expensive, people don't want to do it business with it again. It's too expensive, or you understand. So those are the things those are just the basics of the forex, of what forex is, and the currency pairs. Okay, that's just the basics of it. Okay, so we are done with this phase one, sub A, sub B, and the sub C. I'm keeping this for a different video because it's going to have a little calculation, which is phase one, sub B, and then now we'll go for the other sessions. Like I said, we'll go for phase two. I'm not going to be showing you what is there in phase two, and mind you, it's going to be something very, very interesting. It's going to be eye-opening. Phase two, phase three, phase four, up to phase 10. Okay. I mean, this is going to be a life-changing for you. Just make sure that you back test. And for those who are newbies, make sure that you keep on backtesting. That's how you build your experience in the forex market. You keep backtesting what you have been taught. If you don't backtest, it seems like in school, if they're giving you notes and you don't read them, you're not going to be able to succeed at the end of the course, right? But in forex, it's even much harder in that you have to be practicing it. All right, you have to be practicing it. Okay, now for this lesson, I'll be giving you an assignment to download MetaTrader 4 and MetaTrader 5 on your phones. That you can get that on Play Store. All right, download MetaTrader 4 and MetaTrader 5 on your phones. Those that are using laptops, you can still do that. And then you download, this is called Trading View. All right, this is Trading View. You can download this as well on your laptop or on your phone. All right, so this is going to help you in doing assignments, and I'm going to teach you how to use it. All right, I'm going to teach you how to use Trading View. All right, so that was just it for the basics of forex trading. I'll see you again in the next video.